This is the About Mansfield Consumer Advice Series. Welcome. I'm Steve Casillo. I'm here. It's Friday, and it's now lunchtime. And so, welcome to the advice series once again. If you're out and about, don't go home. Why are you out and about? That's the question. I did. It took me about 20 minutes to drive 3 miles today from my home to the studio. And I think I averaged about 7 miles an hour. And so yeah, it's very, very slick out there. In fact, let's go ahead and bring in our guest. Adam Coen is here. We're talking taxes and how it affects you as the consumer. Just before we get in, Adam, you're from home today. Is that right?
That's right. I know it looks like I'm dressed, but I promise you, it's business up top and winter party down south. So
It's party down.
I'm
I don't want to know about the party down below.
beautiful, beautiful, thick pants and socks. It's just nice and comfortable.
There was a photograph that was on Facebook a couple of days ago where a company held a Zoom at work day, which was wear to work what you have normally been wearing on Zoom. And it was hilarious that people are showing up with business coats and dress shirts and pajamas or flip-flops. And it was I if I wasn't a company of one, I would do that at my work. But
Oh yeah.
so anyway, we are not here to talk about Zoom and what we wear and the weather. We are here to talk taxes. And tell you what, before we get into the nuts and bolts of today's topic, let's go back not only to last week, but then also 2 weeks ago, because you got mail and you wanted to address a couple of topics.
Yeah, and I appreciate you letting me go back. There were two questions that came in, and one was with respect to last week. You asked about how old do you have to be to contribute to an IRA, and I never directly answered that question. I apologize. The short answer is there's no minimum age. It just depends upon earned income. So that's question number one. Number two, going back to the first week, there was a question as to when do you file your taxes? When the short and sweet of it is, if the IRS owes you money, probably ought to file early. If you owe them money, it's worth paying by April, thinking about extending and seeing what you can do to reduce that tax.
All right.
Yeah.
And just a note to the listeners, to the viewers, that if you do have any questions, not only with taxes, but when we do the other consumer advice series episodes, feel free to shoot us an email. You can either contact directly Adam or any of the other guests, or you can send them to me at info@aboutmansfield.com, and we will get them to the respective guests. So today, let's talk about the CARES Act and the ARP Act of 2022 and the tax effects. First of all, CARES Act 101. Let's describe to the listeners, to the viewers, what is the CARES Act and what is the ARP Act?
Well, at this point, CARES Act is almost ancient in terms of the tax legislation. It's several years old now, and it almost seems like it was decades ago in terms of tax. But there's still lingering changes that happen both for businesses and individuals in terms of what can be deducted, how it can be deducted, and what kind of recognition you can have for losses. So if you had a bad year for 2021 with your business income, there are some provisions in the CARES Act which may help your business either carry those losses back or recognize a greater amount of those losses personally. If you had a great year, good on you. Um, that's perfect. ARPA, or the ARP, the American Rescue Plan Act, which was passed in 2021, also has a whole lot of provisions, but one of the main ones to talk about is the stimulus checks and the advanced child tax credit. So first and foremost, child tax credit. People were getting those deposited into their bank accounts. Some people got letters, a lot didn't. They just started getting checks. If you did and you didn't turn it off, there was a way to turn it off. There is a reconciliation you have to do to your income versus the credit you got. And if that situation is such that you got more credit than you should have, you may have to pay it back. So that's something to be aware of. But the letters that the IRS is sending out, They're not all correct. So just be aware that you need to double check your figures and what went into your bank account.
All right, let's go into specifics then. If someone in 2020 took a COVID-related distribution from their retirement account, so this is,
Yeah.
say someone was out of work, someone got sick, and they took money out of their IRA or their SEP account, their 401k. How can that affect their 2021 taxes?
Sure. And they probably know this, but they may not, is if they elected to treat that distribution in 2020 as a COVID related distribution, they can tax that over 3 years, and it wasn't subject to the early distribution penalty. So they probably paid a third of that tax in 2020 or on their 2020 return. They should expect to pay the next third on their 2021 return. And then again next year, the final third.
Okay. Let's get into COVID specifically, COVID and taxes,
Yes.
my two favorite topics. COVID-related medical costs, are they deductible?
Yes. And so let's talk about, there's business COVID related medical and there's individual. So for individuals, as it has always been, your mileage to the lab, your mileage to the doctor, et cetera, your out-of-pocket medical costs, those things get added up. Anything related to COVID, unfortunately, there's some people who got really ill and they were in the hospital. You add all those things together. If it's greater than 12.5% of your adjusted gross income, lots of language there, but if it is, it gets added to your other itemized deductions, provided that that's greater than your standard deduction. You get to reduce your taxable income by that.
Okay. And what are some, you mentioned mileage, you mentioned hospital costs, lab costs. Are there any other typical COVID-related costs? I'm sure somebody out there who has been through COVID can also address that. Prescriptions and
Yeah, prescriptions for sure. And then there's the regular things. There's eyeglasses, hearing aids, et cetera. For businesses, PPE, anything that you've done to make your workspace safe for your employees to return, whether it's moving things out for social distancing, et cetera, all of those items are going to be potentially deductible in one form or another to the company.
All right. Let's change topics.
Go for it.
All right. Can I write my mortgage off my taxes with the new laws?
No, and I'm glad you asked that question because I've gotten that several times recently, and I don't know where that bad information is coming from, but someone is spreading around that you can deduct the full amount of your mortgage payments, as it has always been. Your interest on your loan, your PMI potentially, and your real estate taxes are what's deductible on your primary residence. So not sure where that came from, but there's quite a few people who've asked that question recently.
So why not? I mean, it's a viable question.
No, it's a good question, and it's worth asking. The other thing I wanted to say, Steve, that's real important. As you know, the IRS last year and this year have been in a world of hurt when it comes to processing things. There are 2020 returns, we've discussed this before, that still haven't been processed. The IRS is now sending out letters saying, hey, by the way, we can't find your tax return. We've lost it. Would you please refile it? So if you get one of those letters, they're legitimate letters that are coming out that say you need to refile your return.
The government has lost my tax return.
Yes, and laughably, in some cases, the tax return is lost, but the check that was sent with the return was processed.
How does that make sense? That doesn't make sense. But so
you got me.
All right. If people have more questions about taxes, how do they get in touch with Adam Coen?
Sure. Give me a call, 817-231-0666, 231-0666, not tax devils. Or go find us on the web, dfwtaxteam.com.
Adam Coen, let's do it again next Friday.
Let's do it again. More crazy questions and crazy times.
Next week, we'll talk tax records and document retention.
Oh, all right.
Yeah. So do your homework now. We'll see you next week.
I'm ready.
All right. Thanks.